It's already 2.5 months since my last video about Tesla. Tesla is now 40% higher. I have been buying more shares using the recent correction in the Tesla stock price. As Peter Lynch used to say, the best stock to buy is the one you already own. Have you done any transactions on Tesla stock recently? Let me know in the comment section. Today, I will focus on the longer perspective because that is how I analyze businesses. So first, remember that Tesla isn't really a car company. They are power solutions and technology company. Yes, they started with the production of electric cars, but they expand in energy production and storage, as well as in technology solutions development. Tesla is the leader when it comes to squeezing range out of lithium-ion batteries. Additionally, Tesla, together with Waymo, is considered the most advanced company in the area of self-driving technology. So that is a very positive picture. And there is a long road in front of car manufacturers to catch up with Tesla. By the time the market catches them, they will have moved on to the next thing. So saying that Tesla is just a car company is like saying in the early 2000s that Apple is an iPod company and they better watch out because other companies are going to make digital music players too. I hope you can see my point here. Today's video is about Tesla, but I will talk a lot about another company. And it will not be a car manufacturer. There are many similarities between Apple and Tesla. I will give you my prediction of the sales of Tesla and its market capitalization in a few years from now. Okay, so what is the first similarity? Both companies focus on the premium segment of their respective markets. And that has very important consequences, which will tell you a lot about the future of the Tesla company. As you know, Apple has always been focusing on the premium segment. They were not interested in selling their products to every customer. Pricing of their devices meant that they were not competing with other manufacturers of electronic devices. iOS is the operating system for iPhones and iPads. The market share of iOS went up from around 1% in 2010 to almost 15% currently. The Mac operating system took around 8% of the market share of the operating system. Apple's iPhones now account for every fourth smartphone sold in the world. Let's look closer at the primary market of Tesla now. Do you know what is the market share of Tesla in the United States now? I will give you a few seconds to answer. Yes, it is around 1%. Only about 1 in 100 vehicles sold in the United States are Tesla cars. Do I think Tesla will get such a high market share in 10 years from now? I do not think that every fourth car on the roads will be a Tesla car in 10 years from now. One reason is that the car replacement cycle is around 4 years, and the replacement cycle for smartphones is approximately 2 years. But yes, I think Tesla might sell every fourth vehicle in the United States in around 10 years from now. Okay, but let's not go into the future too much. My base scenario is that the market share of Tesla vehicles will gradually increase, similarly like it was the case for Apple devices. As you can see from this infographic, Tesla was already the 5th best-selling luxury car brand in the US last year. Okay, but why focusing on the premium market is so important? That is where excellent sales margins are. So the next question is, but why will Tesla be able to have high profit margins? Margins of legacy car manufacturers are low because they do not leverage through software. Software and positioning itself as a premium segment will give Tesla the high margins. Another essential aspect for generating high sales margin is keeping costs low. That is possible thanks to vertical integration, which is the focus of Tesla. Tesla controls every process in their production and ecosystem. Vertical integration grants Tesla more control over details of its manufacturing process and allows Tesla to respond much faster to potential improvements and at a lower cost.
Will people buying BMWs and Mercedes cars suddenly start buying Tesla cars?
Let's think what sophisticated buyers want. They want devices or cars, in this example, which work well, so they do not have to care too much about repairs and time when they cannot use their vehicles. They want things which look good so they can impress others. And they want innovative devices. Do you know any other car brand which is considered innovative? I thought so. Besides, thanks to Tesla controlling software of their cars, the car can get better with time. Tesla cars regularly receive over-the-air software updates that add new features and enhance existing functionalities via Wi-Fi.
Okay, Damien, but how many cars can Tesla sell?
The most important thing to consider when comparing Apple to Tesla is that while the iPhone is expensive at approximately $1,000, it is still considerably more affordable than a Tesla car. Let's get into sales data. The average selling price of the iPhone is around $650. For a Tesla car, it is above $50,000, so it is 67 times more. Let's assume that Apple is selling only iPhones, no MacBooks, iPads and other devices. I know it is a big simplification, but let's focus on their main product. Apple sells around 200 million iPhones in the calendar year. To achieve the same revenue as Apple from iPhones, Tesla would have to sell just 3 million vehicles. Do you think it is possible? The biggest car manufacturers are selling 3 times more. Of course, these car manufacturers sell a wide range of cars, so their average price is lower. Still, as was shown in the example of Apple, it is a better strategy to focus on the most affluent customers first and gradually take more and more market share also in the cheaper devices or cars category. The average selling price of around $55,000 shows that for now Tesla cars attract people who buy even more expensive vehicles and they choose better equipped versions of Tesla cars than just the cheapest version available. Tesla does precisely what Apple did in the past. Elon Musk announced that Tesla would reduce the cost of its battery cells and packs, which means the company's new goal is a $25,000 electric car. Many speculators were disappointed by the Tesla battery day and Tesla stock price went down. But I'm pleased with that. It allowed me to add more shares at lower prices. But let's come back to the discussion about the $25,000 electric Tesla car. Today's battery packs cost around $10,000 to $12,000, depending on their capacity. Low battery prices could be the key to unlock more affordable, higher volume electric cars. Tesla is aiming to reduce the cost of future packs to less than $6,000. Elon Musk also told one more thing. He predicted that Tesla would produce 20 million cars a year by 2030. Elon Musk is sometimes optimistic with the timeline of his prediction, but he is delivering, but maybe with 2 to 3 years delay. If we compare it with worldwide car sales numbers, it means around 25% of car sales being covered by Tesla. So what about valuation? If Tesla sells just 3 million cars with a similar margin as Apple, the valuation of Tesla should go to around $1 trillion. And I do not talk about other businesses of Tesla here yet. The 5 years time frame might be optimistic, but who knows? Elon Musk thinks that Tesla will produce 20 million cars a year in 10 years from now. Do you think It is an optimistic prediction. What is your prediction of Tesla's production in 10 years? Let me know in the comment section. I will talk about the production capacity of Tesla soon in another video, so subscribe if you do not want to miss it. Tesla delivered over 388 million vehicles worldwide during the last 4 quarters, and only 1.5 Tesla factories were operational. I think that Tesla's average selling price will go down, but like in the Apple ecosystem, Tesla's car users will pay extra for other services: superchargers, self-driving capabilities, cheaper car insurance thanks to collecting detailed information about drivers' behavior. You are awesome that you watched this video till the end. I have something extra for you. If you want to take your financial future in your hands, I compiled a list of 14 disruptive companies which are worth looking at in more detail. Identifying the main trends is where you can make real money. I analyzed 4 trends which will allow you to make good returns from the transformation of the economy. I also gave you examples of companies benefiting from these trends. I can see a significant probability of doubling the market capitalization of these companies in 3 to 5 years. If you enjoyed this video, make sure to subscribe and click the bell to receive a notification about a new video being published. Thank you so much for watching, and until next time, happy investing!